The dollar is lower to start the new trading day versus the major currency pairs. The three major currency pairs are euro versus US dollar, dollar versus yen, sterling versus US dollar. From a technical perspective, I'll go through those things that are leading this the moves to the downside in the US dollar. So let's get started. Let's focus on the hourly chart of the euro versus US dollar. And trading early yesterday, we had that move to the downside off the Trump comments. The price low came in near the 1.1307 level. And toward the end of trading day into the start of the new Asian Pacific session, the price moved back down toward that 1.1307 level. Couldn't get through that level, couldn't get down to what I consider a key support level for the euro versus US dollar near 1.1273. That level comes from the daily chart. If you go back in time and take a look at the high price going back to this point right here, which is July of 2023, that level came in at 1.1275. The 61.8% retracement of the move down from the high price in 2020 to the low price in 2022. That level comes in at 1.027709. So 71 to 75 is the key target on the downside to stay above. If the price can stay above that level, then the bias can remain to the upside. If we move below it, I'm guessing that we're going to see more probing to the downside. So this line right here, this red line right here, represents that level. We'll watch that. Of course, if we do get below it, we're also going to need to get below 38.2% retracement of this move to the upside. That would sort of be the bearish point where things turn increasingly more bearish below 38, below the 71 level. But I would expect that the 71-ish type area 71 to 75 should hold support. Nevertheless, we've already seen a move back to the upside off of this 113.07 level, which is kind of a random area to be honest with you. But we are finding some resistance right here against the 200-hour moving average. We see that often in trading yesterday. When we came into the day, we were trading in between the 100 and 200, and then we broke below that level, increasing the bearish bias. So now what was a once support now becomes resistance, and that level comes in at 1.13916. If we move above that, we're in this neutral area between the 100 and 200-hour moving average in the short term at least, and we're going to need to get above the 100-hour moving average to increase the bullish bias. So key target that we're testing right now as we come into the US session. We'll see what happens at that level in trading here today. If you are selling, lean against it. If you're a buyer, you want to see it get through that level and then get through the 100-hour moving average. Let's take a look at the dollar versus yen next. Again, I'll focus on the hourly chart, and this currency pair has made its attempt to get above the 200-hour moving average not once but twice in trading yesterday. The first off of those Trump comments and that chair is not going to be fired, blah, blah, blah. And then we rotated back to the downside. We did find support against the 100-hour moving average in this swing area down through here. That was somewhat positive. And we eventually moved above the 200-hour moving average and then based near it and to move higher into the close. Now the close moved up toward this high right here, finding willing sellers against that level at the start of the Asian session. It's been down, down, down goes Fraser all day since then. We moved back down toward the 200-hour moving average, comes in 142.198. Guess what? That level is going to need to be broken in order to increase the bearish bias, put ourselves within this neutral area and get below the 100. It would be more bearish on the downside. If we hold support against this level, then a move back to the upside cannot be dismissed, and we would then look again toward our high prices right through here at 143.57. Ultimately, if the price is going to go higher, we need to get up to and through that level and to the 38.2% retracement of this move to the downside. If we can't get above the 38.2% retracement, this corrective move is just a plain old vanilla corrective move in what has been more of a bearish bias here for the dollar versus yen since the end of March. The price has moved down from 151 all the way down to 139. That's 12 big figures or 11 or 12 big figures. That's a pretty big move to the downside in a relatively short amount of time. So getting to that level would just be a regular old correction in what has been a bearish move to the downside, so be aware of that. But first things first, 200-hour moving average is going to be the key barometer for traders today. Be aware of that level. Finally, we'll take a look at the sterling versus US dollar, and here we have the price toward the end of the day moving below the 200-hour moving average. That was a bearish play. The sellers were making a play but they could not sustain that momentum. We moved back above the 200, and although we did dip below it once again, this 200-hour moving average is moving to the upside. The momentum below that 200-hour moving average was very limited. We couldn't get down to the lows right here. We started to see the buyers re-enter. We are in this neutral area right now, in between the 200-hour moving average at 1.3276 and the 100-hour moving average at 1.3226. And with the price trading in between that, then we need to get either above it or below the 100, move above it or move below 200 to increase the bearish bias on the downside. Watch this level at 132.92. Is that 92 or 97? It looks like 92. 132.92 for interim support. If we can hold that level and the buyers remain in control, and we look for a break of the 100-hour moving average. So there you have it. A look at 3 of the major currency pairs to kickstart your trading day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.